Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. It's a TGIF, folks. Let's make it a great one. Market-wise, let's take a look at it out here. We have the Dow Industrials down 48, NASDAQ down 70. NASDAQ is absolutely getting taken apart, folks. We'll get back to that. S&P's down 15. You had the DAX off 219 today, at 16 rather. The FTSE was off 91. Gold contract down $2.90, trading at a price point of $1,222 an ounce. Silver down 9 cents at $17.32 an ounce. Platinum down 13 at $1,261 an ounce. Copper flat at $3.03 a pound. Light sweet crude flat at $85.78. That's after rejecting lower price. We got some juice down there, though. Bonds, the 10-year up 4 ticks at 126.18. Whoops. Let's see. I believe that camera's up there, but let me reset that for you in case you don't see that camera. Apologize for that, folks. So the 10-year is up by 5 ticks, 126.19. That took out the August swing point. Wide price spread, accelerated volume, daily, weekly, monthly, all of the above. We're going a lot higher in price and bonds, a lot lower on yields. 30-year up 16 ticks at 141.10. Same deal with the 30-year. King dollar up 380 ticks at 86.03. You got the euro down 76, trading out at 126.15, and the yen is flat at 107.81. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the markets, let's take a look at it. What do you have out here? Okay. Cash S&P, we have 1921.59. Your swing point out there is 1904.78. We've got down to 1912. The high of the low is 1928. Volume-wise out here, we're going to come in with some volume, not only on the dailies, but we're going to come in on the weeklies. If we go look at the SPY, we take a look at the SPY. This is what you have inside the SPY. The SPY is trading at 191.60. The swing point is 190.55. Your volume at the swing point, folks, is 135 million on a daily. And forget that, man. We're blowing that away. We got 163 right now. That's on the daily. Now watch this, though. This is where it gets really intense. On the weekly, there's not enough room to get out. And this is what you have. The weekly swing has 592 million shares. Well, we're going to do about 850 million shares. They're getting out, fast, furious, all of the above. So what does that set up? Okay, so we stay with the SPY for a second. Oh, let's go to the Dow first. Okay, so you get the gist of it. You're coming down, expanding volume into swing points, all of the above. Dow Industrials today down 47 bucks. The swing low on the Dow is a lot lower. We're talking about 16,600. Inside the Dow Industrials today, what you have taken out of it, you got Intel down $1.45. You got Microsoft down 151. You get 3M down 441. You have Cisco down 61. Giving it some juice is that you have Procter & Gamble up $1.50. Coke's up 68. United Healthcare is up 89, and Walmart is up 64. NASDAQ Composite. Now, the composite, folks, is screaming, and what it's screaming, folks, is this. And this is the follow-through from the DAX also. For some reason, the NASDAQ trades like the DAX does. The NASDAQ is it broke the swing point, but basically took it apart. The swing point on the NASDAQ is 4352. No, 4325. Sliced it, diced it, all of the above. So what the NASDAQ is saying is that, guess what? We're at 4,300. Not next stop, because we'll get a bounce here. It's 3,900. Big numbers, folks. Big numbers. That's on the daily. You put this on the weekly, and what you're going to see on the weekly is that the same numbers set up, and if we bring this back a little bit further, there's a lot more destruction to come. And I suspect this is going to take a while. This is not going to be an overnight occurrence. But what you do have, and this is how, when this always shakes out after the fact, It's pretty incredible how these channel lines shake out, because the break of the channel from April of 2014 was the number. That was the first decisive break with volume. It gets back up, and it tried to get back inside that up channel of the NASDAQ, but it couldn't do it. Then what happens is that it's taken apart on the downside. We take a look at the 3Qs. What happens at the 3Qs is this. 3Qs right now down with 60 million shares. Your swing point on the 3Qs is 93, 92. That only had 34 million shares. That's on the daily. On the weekly, what we're talking is that thus far, this is pretty intense. We've done 269 million, and that swing point down there. Actually, the swing point's at 364, so it's going to need a lot more on a weekly basis as it gets down to that price point. Now, that being said and done, okay, we take a look at this market. We're going to go back and show you this S&P. So, the cash S&P right now, we are at 1922. Your swing point is out there at 1904. What you're going to still get are bounces, but every bounce, folks, you're going to see it's on light volume. It's anemic, and bounces are made to be sold. That's how this is shaken out in a big way. Inside the NDX 100, if you want to see the first, okay, so let's talk about what's getting taken apart today. What's getting taken apart today, folks, are the chip stocks. NXPI is down 15%. $7.32 is down today. AGVO is down 11%. It's down 8.42. Micron Tech is down 242. You take a look at Micron Tech. This is a classic. It's a classic. They stay at highs. They don't have the juice. They have high volume, low points, swing points below them. And when they scream down, they scream down. So in 1 week, what you have even with Micron is Micron just took back 4 months in 1 week. Micron is at $28 and it's going to 18. I mean, the volume's blowing out. Everything is there. Period. It's breaking swings. Volume's blowing out of the stock. You know, people are abandoning ship. They're jumping off the ship beyond belief. Gold contract. We go over to gold. What we have with gold is this. Gold had rejected lower price last week. Did it with lighter volume. Had some nice price spread this week. Gold is trading at $12.22. Gold is going to be making its way up to the $12.97. The correlation, the difference in the correlation, folks, from the 2007, 2008 markets in the S&P versus the metals market is this. The metals market was at highs. And the reason I'm bringing this up is that I had a question this morning on the early show about gold in general and, you know, where I thought it was going. And if you remember in 2007, 2008, everything went south. What the question was specifically, Jarrell was asking me, what is the correlation between the S&P and gold? So in 2007, 2008, you had gold at highs, S&Ps at highs, everything at highs. They took everything south. If you remember, gold went from 1,037 down to 666. The difference here is that the S&P was at highs and gold was at lows. Different correlation, absolutely different correlation. I expect as we keep going south, metals are going to keep going north. The larger picture, and this is where, so I'm going to go back to the S&P for a second, because the larger picture here is pretty disgusting. And for all you folks that are long and strong, all you have to do is get stops in. You don't have to believe a word I'm saying. Just get stops in. Okay, so what do we have? Let me go to the XLE first. So the XLE, the oil and gas sector, folks, okay, the February 5th benchmark is crucial to understand. And what we had with the February 5th benchmark, in the XLE, the high of that is 84.17, the low of that is 81.77. The volume characteristic there is 98 million. Well, the XLE has just come down from 101 to 83. It's going to blow away. It's blowing away the swing point. It's coming down, folks, with 164 million shares versus 98 million. The XLE is slicing, is dicing this, and it's just going to eat it alive, okay? The XLE is going to make its way next stop down to like 77. You get volume, continue there, we're going to 61. At 61, you get a 40% retracement off the highs. Guess what? The XLE is coming down there. That February 5th benchmark, we'll talk about what we get. That's the next stop. Tom O'Brien, TFNN, you stay right there, folks. We'll come right back.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details, and to start your 30-day free trial today, log on to TFNN.com now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. 877-927-6648. Give us a call, folks. Want to know what's going on in your world. Okay, so we go to the S&P. When you want to wrap your head around, folks, is this. Okay, so I'll start with the SPY first. Because you have two separate issues happening here. So we started with the XLE, and what I want you to understand is that the oil gas sector, it's already at the February 5th benchmark, the week of February 5th. It's there with volume, so the probability is that it's going to break it. And when I say break it, it looks like it's going to break it with conviction because the volume is extraordinary. So you're not going to have, well, Theoretically, you're not going to have the oil and gas sector go there, and the S&P's not. So, where we at? The SPY right now is at 191.31. The high of the low is 179, and the low is 173. That's a long way down from here if you thought that this is a rough week. The volume already is expansion beyond belief. We've already done 820 million in the SPY, and at that low is at 888 million. So you can see that you have the expansion. That's the first part. So that's where we're going, okay, with bounces along the way. That only, folks, though, is the smaller picture. The larger picture, you absolutely want to wrap your head around. We've been going up for 5 years. It's not pushing it that you're going to be going down for a year and a half, whatever that's going to be. Why? Because we took out the trend line. And this is the great news has been we've been going up in a straight line. The bad news is when you go up in a straight line, you can go down even with a faster line. And we took out that trend line with conviction. That trend line, okay, if you've ever been to one of my Master Trader series in person, or even you just have my book, you know that as you hit that trend line, it's a mind blower, because what happens is that you can hit the trend line with volume, and what that is giving you, the channel, that's giving you the heads up that it wants to break it. In this case, you know, it didn't break it, you know, for almost 2 years. Kept hitting it, though. First time it hit it was June. And this is where it comes down. If you had corrections in between going straight up for that long, you'd be better off. But, hey, it is what it is. So the first time you hit it on the way down was June. Rejected it. Second time you hit it was October of 13. We went up again. Hit it again. February of 14. Goes up again. Hit it again. And August 14. And each one of those times, it's clear as a bell. It's coming to a volume, and what that characteristic is that it's hammering away. Once it breaks, see ya, don't want to be ya. And that's what we've done. And we've done it with conviction. So, not to be the bearer of bad news, but inside the S&P, if you want a number, this is like insanity, okay? But the bottom line, this is what the number. The number inside, we're 1719, you're talking about 1388. You're talking about 600 points. What's that, 550 points down. That's a big number. Let's go to Jim in Ipswich. Hey, Jim, what's going on?
Not much, Tom. How you doing, buddy?
I'm doing great, man. Thanks for calling. Thanks for holding.
Yeah.
What do we got?
Looking at a company called LRAD.
LRAD. Let's take a look. This must be quite a company since it's up in this day. Seriously, right? It's up 12 cents. It trades at $2.78. It's amazing that any stock is up today.
Yeah.
It takes in $3 million a quarter. Okay, so what does it do? They develop, produce, license sound technology and proprietary intellectual property, engineering sound solutions, commercial, government. What does this company do?
They make hailing devices, you know, crowd prevention, products like that. They're on ships in the military.
Okay.
Military is the biggest customer.
I see. Okay. So we have an equity that took off from $1.86, gets up to $3.88. Well, if you own it, I'd put a stop in. You know, what this will eventually do, okay, so you get a consolidation now. It took off from the 184 level. It has nice juice up at the highs, 368. I wouldn't be buying it here because you're right in the middle. You know, so your risk-reward doesn't work. But, you know, if you own some of it, I'd put a stop right where you are. The reason being is that a normal retracement on this brings it right back to the 184, you know.
Okay.
Yeah. And that's not that. That's what they like to do. It's not like, you know what I mean, but it's a good-looking chart, man. You know what I mean?
Yeah. All right.
Okay, man. Have a great one. Have a safe one. So let's go over to Texas Instruments, because what I want to show you here is this. So when you have monster corrections, if that's what you want to call it, that I suspect we have now. First, what you have, folks, is you have one sector get taken apart. Then you have the next sector get taken apart. Then the next sector gets taken apart. And it takes months, okay? Bottom line, you go look at the techs, the chip makers, Texas Instruments is absolutely taken apart today. And literally in 6 hours, Texas Instruments has just given back 10 months. 10 months in 6 hours. That's only the beginning, though, because what you have with Texas Instruments now, Texas Instruments is up at 42. It's going to trade at 26. These are crazy numbers, but guess what? It was crazy numbers on the way up, and they're decisive breaks. With volume. So what the 36 would get you on Texas Instruments, it gets you back to the breakout area from 2011. So there's some big numbers out here. You take a look at some of the high volume stocks today, and there's some real destruction. You got Twitter down $4, $4.50. Facebook's off $2.56. Halliburton's down $2.90. You get Texas off $3.50. Inside the Dow, what you have, let's see, G-O-O-G-L. My man's telling me to look at Google. Yeah, Google's down 13. Hey, listen, we can go on and on. Bottom line, folks, please get stops in. All the stop is saying is that, guess what? It's just like bringing your car to a place to get fixed, folks. The bottom line, you say, okay, want to get it fixed. I don't want you to spend more than $100. That's your stop loss. You know, if you've been in this market for a while, you get huge gains, okay? And, yeah, you can be bumming out that, this week is down. But guess what? You don't want to be bumming out 3 months from now when the market is down 20%. And guess what? If I'm wrong, right, it won't matter because the market goes up and, it doesn't hit your stop, you have your cash. This is what you have to look at. This is how you should look at it. You should look at it. Are you satisfied with what you have right now versus losing more versus even making money? If you do it that way, it's real easy to put a stop in, because then it's like, I'm out. And let me tell you something, folks. The more that this volatility comes in, the harder it is going to be getting out. And when you call your advisor, you know what they're going to tell you? They're going to tell you you're diversified. That's what they're going to tell you. And I would ask them, what am I diversified? What is your definition? You ask them, what is their definition of being diversified? That's really important to understand. Diversified in equities, diversified in bonds. What is the identification and what does that mean to that certain person? Because that word gets thrown around beyond belief. And if you've learned anything over the course of the years in the marketplace, it didn't matter what you had in 2007, 2008. JNK, let's go take a look. So Barclays High Yield Exchange Traded Fund. We'll take a look at that as soon as we go back. Our phone number is 877-927-6648. Dow Industrials right now down 56. Nasdaq's off 83. S&Ps are off 16. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. And folks, when we talk bonds, okay, when we talk the 30-year bond right now, okay, you're at 141.12. And, you know, depending on how long you've been listening to me, you know that the speculation was going to go up to ICE. So what ICE is, and this happens to be a 0.618 retracement of the whole move down also. And it just happens to be set up at the same area. So this 142 area, you know, the bulls can make a case that wants to go higher. The bears can make a case that it's basically a counter trend bounce in a market that wants to go down. Now, the way that we came into this, we're coming into this with conviction. I suspect we're not only going to take it out, we're going to rip it apart and, you know, get up to 151. But in that case, so check this out. This is pretty intense. Last week, okay, so the way the bond market works, folks, okay, is that the biggest bond brokers, meaning that they're primary dealers with the Fed. Well, guess what? This is intense. The primary dealers had one of the largest short positions on as of last week, and they got burnt in an extraordinary way. This just came across, okay, because they have to divulge what they have on at the end of the month, end of the week. So they had on a position. So picture this. I mean, this is pretty intense, man. It's not that it was a lot of money. It was $20 billion. But that's a good amount of bread when the bond market goes up 1.5 percentage in 4 days, which it did, okay? Because the reality is that leveraged-wise, they, bottom line, took it deep very quickly. So the point is that when you're trading, you better have stops in, period. And even the primary bond dealers are perplexed as to what is going on inside the bond market, which is pretty intense, which is really intense, actually. So I'm in Victor from New Jersey. He wanted to look at Twitter, TWRT. If we pull up Twitter, Twitter's down 452 right now, trading at $50.77, and don't touch it. You know what you have with Twitter. Twitter has a that's kind of nice, actually. It's only a 5% short position. That's not bad. You know, Twitter wants to go fill a gap. Twitter's got a monster gap here at $38. You're at 50. You know, you get a little support here at 48. That gap's going to get filled. You know, what you really should start doing, you know, if you want to be long stock, folks, this is the time that get a list up of what you want to get and, you know, put it in a drawer, and, you know, 6 or 7 months from now, you're going to be able to take it out. Microsoft is getting basically taken to the cleaners also. Not enough volume on Microsoft. So Microsoft is going to be intriguing in the context of a stock, the way this is set up, that you very well, you know, will be looking to buy. You know, Microsoft had a nice run. You know, it went from a price point of $30 up to 47, and the first place I'd look at it is 38, and more than likely you'll probably get it somewhere on down 36. So, and Microsoft is paying a 2.8% dividend at this price point. You know, so there's going to be plenty of stock, but what happens is this: if you make the list prior to the destruction that I think you're going to see here, you're going to be a lot better off, because and this is a huge and, folks, that you're in cash, you know, so you can think. That's crucial to understand in the larger context. We take a look at some of these Dow stocks out here. You have GM's down 61. You get Honeywell off 134. Big Blue is flat. That's at 186. That's holding up well. So let's go over to Big Blue and see what's happening with Big Blue. So Big Blue, that's deviant. Still wants to go lower, but it's holding up really well. The XLF, let's see what we have happening in the XLF. The financials, they're down 9 pennies with volume again. See, what you're going to have with the XLF is this is deviant. The XLF is basically slightly lower. You're at 22.67, and 22.16 is some support. What you're absolutely going to be waiting for is when the financials basically just get taken apart. The DAX in Germany got absolutely taken apart. I mean, in a big way, not in a small way, and that's really problematic into the point of not only where Germany is, but where a lot of these markets want to go. We take a look at the QQQs. The Qs, now you got to remember this. The Qs are getting taken apart, and that's without Apple getting taken apart, which is 14% of the NDX 100. You know, and Apple, you know, my take is Apple's going to go south. The Qs right now are down 67 million shares. You're coming into the swing point of this 93, 91. The high of that, which is it's going for it right now. The high of the February 5th deal. So check this out. These benchmarks are a trip, man. No, not the February 5th. This is the August. The high is 95.69. Just came into it. It's 94.90 right now. That volume there was 191 million, and you come into that with 276 million. You know, big numbers. The GDX. Let's take a look at a GDX for one of the tigers. The GDX right now, which is the gold miners Vectors Trust. The biggest weighting structure inside that is Goldcorp. You have Goldcorp, Barrick, Newmont, Franco-Nevada, Silver Wheaton, Rango Resources, Newmont Mining, Newcrest rather, and if you look at to buy that, you could buy it around here. You know, you go topside, and it's scary. I know, believe me, it's scary. You go topside, you're 20 to 22 bucks. You have the wide price spread. You did 114 million. You're backing down today with 30 million. You know, the way that's set up is that that broke the downtrend. You know, so we'll see if in fact that can hold up, because there's no doubt they are taking apart a few of these miners. If we go over to Rango Resources, Rango's down 228 right now at 66.42. We had gone up within 1.5 million. You get 880,000 out here right now. If we take a look at AEM and Eagle, that is coming down with 2.4 million. It went up with 5.1. You know, so the volatility, no doubt, makes it really heavy all over the place. And one of our tigresses is saying that her platform is slow. And what you do have, this is always important to understand this too. When you have fast markets, folks, okay, you want to have your orders in. Absolutely have your orders in, because you could have the fastest platform in the world, and when things go, when you have a fast market, which we have, everything slows down. And the reason everything slows down, folks, is that there are so many orders getting piled up. It's huge getting piled up, okay? I always could tell, and I'm sure most of the folks that are in the den know, I have a couple different platforms, and I would love it when the Bloomberg slowed down, which slows down a lot. I know that, well, I speculate, but I've had it for 19 years, so what ends up happening, I know that the orders are piling up, and the platform can't handle it. And what that does, it gives you, 30, 40, 50 seconds to realize that, okay, man, something's coming down the pike here, and it's not going to be pretty. So, because it was really interesting here, by the way, this is how it works. That happens on the way down. It doesn't happen on the way up. So when this first used to happen, I'm thinking to myself, man, they're doing this on purpose. They're slowing everything down so you can't sell. And and I know, of course, I don't know, but I speculate that that is not the case. What the case is that everyone's trying to get out the door at the exact same time, and the doors are way too small in order to get out that door at the exact same time. That's just kind of how it sets up. We go take a look at let's go look at Amazon, because Amazon had looked to me, she's holding tight, man. That's pretty good. See, a lot of these, are going to get blown apart. Amazon wants to go a lot lower, but she's been holding tight. The amazing part about where we are right now, folks, is that good old Jack Ma Alibaba did it again. I mean, this is pretty amazing. If you hadn't heard, when he was pulling Alibaba into the IPO, Jack Ma had already done an IPO with Alibaba, did it the day of the high of the Hang Seng. Then ended up buying all the stock back at the same price that he sold it at. And of course, then he does another IPO. 7 years later. Does the IPO 7 years later, worth billions and billions and billions more, not even close. And it looks to me like he hit the high again. What are the odds of that? What are the absolute odds of that? And what's really cool is that the Chinese, no doubt, in numbers, are just dynamite. I mean, they just they love numbers, and we all should love numbers. That's the bottom line. But I would love to know who his number person is, because it's like, did they pick out the numbers to go IPO that day? I mean, how is that laid out? Because what are the probabilities that your stock goes public number 2 times? That doesn't happen. But then it goes public 2 times at the highs of the markets. Pretty intense. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll come right back. Dow Industrials right now down 63. NASDAQ is off 88. S&Ps are off 19. Percentage-wise, what we have, you get the Dow off 0.3%. The NASDAQ is the one getting taken apart. It's down 2% with monster volume. We're going to right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. And, folks, as you're over at TFNN, you're going to see right under breaking news the first mortgage program. That's the Tiger Real Estate Opportunity Fund first mortgage program. And the way that works, well, first off, if you have cash that you don't need for 4 years, if you're in the CD market or you just basically don't want to be in the equity market, we think it's a great program for secured investment. The way this works is that we have many properties that we're doing a first mortgage on. We pay 5% on a yearly basis, paid monthly. If you go to TFNN, you go run to breaking news. I did a little video. You can check out that video. Once you get to the site, meaning you hit Tiger Real Estate Opportunity Fund site, what you're going to actually see there, you'll see some of the portfolio. We have a lot more houses than that. You'll see some of the portfolio. You'll also see, it'll say sample closing documents. You'll actually see the documents. Those are real documents that you will get. We've changed the name on them. But those are the actual closing documents. The fund pays all the expenses. So you basically get a secured property, and it's not a pooled investment. You own the first mortgage on the property. You get title insurance, all the above. But check it out over the weekend if, in fact, you're in the CD market or you're looking to diversify and you don't need the money for 4 years. That's the crucial part to really understand. When we take a look at the NASDAQ out here right now, here, let's go through all of them, because what you have here is this. If we go with the 3 Qs first, let's do the SPY, because you get ABC structures down all over the place, folks. They may turn into complex ones, but the bottom line is you have them. On the SPY, your A point up here is 201. Your B point is 192, so you get $9. Your C is 197. That gets you a 188. A level. You broke the B, broke good volume, did all the above. That's the smaller one. The bigger one is more problematic. The bigger one is just breaking the swing at 190.55. Right now we're at 190.77. As soon as you break that, guess what? Bye-bye, okay? Because you're talking about a 180 S&P then, you know. These things are going to be fast and they're going to be furious. What is going to be wild coming into this close here, you got to remember, the number on Apple is 100.72. Now, Apple stayed over that level almost all week. And right now, you're at 100.84. Now, what that number is the high of Apple that was taken out, and it was taken out 7 weeks ago. And it was taken out with dramatically lighter volume. You know, so that number's a big number. What I expect you have here with Apple, you know, Apple has already told us they're buying back stock. They have been buying back stock. Apple is the one that's keeping their own stock up. They're just blowing their brains out trying to keep it up, because guess what? In this market, it wouldn't matter if you were the new Apple and you were basically could go places. It's not going to matter, because what's going to matter is the amount of selling that's coming in, number one, the amount of margin that is out here. The margin's never been so high, just so you understand that. Never, never. What you're going to see, and I heard our man Dave White talking about this week on his program, is that when this margin selling starts, folks, you've never seen anything like this in your life, okay? You know, and the amount of leverage that is in the system now is incredible, and broker deals just close them out. It just close them out. You know, so you're going to see that, and we're going to see that in an extraordinary way. Now, let's talk about gas, because this is so cool. I'm in Trader Town here. So the gas market, gasoline today, folks, is down 2 pennies. We're at 2.25, and bottom line, it's running at 2.15. So at 2.25. You know, you're gonna see 275 unleaded gas. That's how this thing is shaking out. Volume-wise out here, what you're gonna have on the daily, weekly, monthly, you're gonna have some real juice here. This week we did some real juice. And what is going to be ironic is that you're going to hear that, hey, we finally get volume in the marketplace. Well, guess what? You know, yeah, we have volume in the marketplace. That's when markets go downtown. And when you hear this correlation, folks, you really want to wrap your head around it, okay? When markets are up with light volume, it's all about distribution. All about distribution, okay? That's broker dealers, that's funds, that's everyone pushing paper on you. and you get trapped with paper. See ya, don't want to be ya. It goes south, and the whole thing starts all over again. You got to remember something, that you have accumulation at lows. The longer the accumulation, the higher the markup can be. Accumulation is light volume. Markup, you get real volume. At the highs, you get light volume. Markdown, and as we started markdown, it's clear as a bell. Vicious volume on the way down. The biggest volume all the time, even when you have a real market that goes up with volume, your acceleration on the way down, and that's one of the real clues that you can get, that you have a change of dynamics in a huge way, is the volume just comes out, and it comes out beyond belief. And you'll get it. You'll also get that confirmation. If you think that, that's still bullish out here, you'll get the confirmation on the counter trend bounce. On the counter trend bounce, you'll see the volume contract dramatically. What you'll also see, though, is very fast markets even on the way up. You'll see expansions on the way up, 200, 300, 400 points. If you remember, 2007, one of the biggest days, it was up $900, and it gave it all up. It gave it all up the next day. Bye-bye. See ya. Don't want to be ya. That's the type of market that we're in right now. Small caps started it down. They're going lower dramatically. The small caps out here this week, they took it all out. The small caps took out going back to September of 2013. Small caps are lined up right now. You get the IWM at 104. It's lined up to go to 79. TZA for you guys, Tigers and Tigers, lucky enough to have the TZA up here. The TZA, off that bottom of 13, you're at 19 right now. 19's coming into the 19.717 with monster volume. That's saying the TZA is going to blow that baby away. Then you take the top of it to the bottom of it. That's saying it's a 25 TZA, and this is going to be it's going to be pretty intense here, man. That's the bottom line. On the weekly basis, 20.58, and the TZA had 90 million shares. You're coming into that with 133 million. That's going to just take it out. Volatility's out there in spades. Make sure you get the stops in, because what you are going to have up, down, and all around are fast markets. When you get your price projections, instead of just selling something, folks, what you want to do, especially intraday, bring your stops down or up, depending on, if you short something, you're going to bring them down. If you long something, meaning one of the inverse correlations, bring the stop up. Because what you're going to see in fast markets like this is that sometimes the trend's just going to keep going and it's going to get out of control. Other times, you'll have those counter-trend bounces that'll be fast, that'll be furious. This is Tom O'Brien, this is TFNN. You stay right there, folks. Our man Dave White's going to be coming back with us. We're going to be talking technology. We're going to be talking markets. Dow right now is down 104. NASDAQ is down 99. S&Ps are off 24. Going to be right back, folks. Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. It's a TGIF, folks. Let's make it a great one. This is a quote by Richard Bach. To bring anything into your life, imagine it's already there. Market-wise, let's take a look at it out here. We ended out on 115, NASDAQ off 102, S&P's off 25, gold contract down $1.70, trading at $1,223 an ounce. Silver off 4 cents, trading out at $17.37 an ounce. Platinum down 12 at $1,262 an ounce. Copper flat at $3.03 a pound. Light sweet crude down 22 cents at $85.55 a barrel. Bonds, you had the 10-year up 7 ticks at 126.21. 30-year up 20 at 141.14. In both cases, folks, what you had, they blew away those August swing points with volume. King dollar up about 375 ticks, trading out at 86.03. The euro is down 77 at 126, and the yen is down 12 at 107.72. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? We're down 19 bucks. We're at 1908. And as we do each and every Friday, I got our tech expert at TFNN, our man Dave White, with us. And Hey, we finally got a down market, man.
Everybody said it would never happen. In fact, Monday morning, I was absolutely elated. I don't know if you listened to my show this week.
I did.
But there were
I didn't hear Monday, though.
But there were 3 commentators Monday morning about 8:30.
Okay.
And they all said, this market is never going to let anybody in. There's never going to be a retracement. And I thought, you're shaking your fist at the trading gods right now, even if you don't have any money.
That's a great point. What Dave's talking about, folks, and this, I'm telling you, when you trade a lot, it really, this is, the odds of this are crazy. Because, so picture something, you know, what Dave just said there, and this is no matter what side of the market you're on, folks, okay? And we have a trader's den, okay? So picture, even when the market's falling apart, you know, sometimes I feel like saying, "Oh, this is it," and I'm saying, you know, don't touch that keyboard, right? Because it's the truth. You know, it's you know, because what happens, folks, is that you just have to stay focused. That's the reality. S&P's out here. We start talking reality, folks. Check it out, okay? So we're down big, okay? It broke a B point, broke with volume. So this is what you have on the shorter term basis. Your 8 point on the SPX is 2019. Your B point is 1926. Bottom line, you got a 94.8 A to B structure. It's a monster. That's going to set you up down to the 1880 mark. Okay, 1815 is the low of the 14th. That's only the small part of this. Okay, the larger part goes like this, folks, and. You know, I'm not going to repeat the whole deal. Well, we can repeat. No, this part is crucial. Okay, so you got to wrap your head around this, folks. You know, I've been talking about the benchmark from the February 5th swing point for forever, last 6 months. So the February 5th swing point on the S&P, the high of that is 1798. The low of that is 1737. Well, the XLE has already gone there. There's plenty of stocks that have gone there. That's where we're going. That's where we're going like right now, okay? You'll get some bounces in between large ABC structures on the way down, but that's going. So you better wrap your head around that because that is about 160 points lower than where we are. But that's the smaller part, folks. The larger part is we broke this channel line with conviction. This baby, okay, this is not going to be no normal correction here. This thing's going down to 1350. And that is insanity. Yes, I understand that, okay? But guess what? You're going to see how this shakes out, and it's going to be nasty because we got a nasty market out here, and it's right across everything. The nastiness, and this is actually what happened, folks, is that we're in a fairly good-sized building here, and Dave was coming into the studio. And I was out in the hallway talking to another guy. Now, the guy I was talking to, he was the main trader for a fund that had billions. Okay? So this is so funny.
I raced against him. He raced GP 250 bikes.
Oh, really?
Yeah. So I know him.
I know. He's an animal, man.
Yeah.
Really, this guy is he's really built, man.
Yeah.
So the bottom line, he's telling me a story. And what he's talking about, so he was in charge of the trading desk. Okay, now they're in, you know, he's in the security business now.
Yeah.
Did you see that? The computer security business stuff.
Yeah.
Okay, so what he was talking about was this. He's looking at the market, and so you get a picture of something. Me and him, we see each other in the elevator a million times, and a million times we've been wrong. Okay, so it's like, man, you know, it's like, oh, you got to be kidding me. So, you know, finally today we're saying, okay, we got something happening. But what he was explaining. And this was really, I understand this, but seeing it and hearing it is different. You know, what we've had in the last 5 years is everything has gone up. You know what I mean? Every sector. And that isn't how the markets always went. And he's saying, do you remember? He says, that isn't how markets go. He says, so he was in charge of the desk, but so in a large fund, folks, what happens, you get someone in charge of the desk, but they have, you know, different traders in charge of different sectors, okay? So, you know, one day, Dave's, his sector's up, mine's down, and vice versa. That's how the market normally works. That isn't what happened this time. And in that context, that's what we were talking about. In that context, that's where we were talking about that, and that's the sectors themselves, because they've all gone up together, you're going to see some real destruction on the way down. The NASDAQ, we go back to the NASDAQ for a second. The NASDAQ absolutely sliced, diced, all of the above. It took out its swing with conviction in an amazing way. We're at 42.76. The NASDAQ now is on its way down to 4,000. And, at 4,000, that's a decent pullback. 4,600 was the high out here. That's on the short-term basis. Long-term basis, now what you have with the NASDAQ, now this is where this gets really wild. The NASDAQ, and this is where, when you look back on technical analysis, you don't want to be the person that looks back on technical analysis. The reason being, what you want to be is cognizant of what it's been doing. And when you look at it, what the NASDAQ, the initial break was April of this year. And it's clear, folks, and you got to look at it, because if you look at it, you're going to get two different things out of this. What you're going to get is that the NASDAQ wants to get down to 2,800. 2,800.
I went through Wednesday night.
Yeah.
I had some time. I went through all 250 IPOs in the last 12 months.
Okay.
I found one I liked.
What is it? Is it Alibaba?
No, it's not Alibaba.
I like Alibaba. Hey, okay. So check this out. No, that's all right.
But I'm saying there's a lot of new IPOs out here sucking up a lot of cash. You were talking about Alibaba.
Yeah.
But there's 249 others out there.
Oh, yeah, no. I understand. The reason I like Alibaba is this. I don't like it at this price. But,
yeah.
But if you're looking for stocks on a longer-term basis, right, keep your hands in your pocket 6, 7, 8 months, as long as this is going to take. And who knows? There'll be bounces in between it, but as long as this takes, might be till next October. Who knows? But when I was looking at Alibaba, then I would go out 2 or 3 years and buy options on it.
Yeah.
And as close to the low as you could get. You know what I mean? Because what happens, folks, is that when you get downdrafts, like I expect we're going to get here, the option premium will go up because the volatility is there. But when you get closer to the lows, the option premium for the calls is nothing like it is for the puts. The calls are much cheaper. So you have two separate issues that are going for you. It's pretty amazing. Bottom line, it doesn't matter what equity you bring up here. Their ABC structures on the way down. Tick-wise, let's see what we get. You have we get a minus 1303 today. Yesterday, I think it was a minus 13 something. That's today. No, it's only a minus. Is that yesterday? No. Oh, I see what I'm doing. 1 second, hold on. I brought up intraday chart. That doesn't work. Yeah, you got a heavy one yesterday. So yesterday was minus 1374. Today was minus 1303. What you do need though for a longer term bounce is, look at this, and the arms, folks. The fear is not even there. This is so dangerous. It's unbelievable. It's unbelievable.
I've got a chart that we'll show here about earnings coming up this week.
Yeah.
But I was going to cover that when we come back.
Okay.
That we've got a lot of earnings. It's going to start and it's not going to end for about 4 weeks. So there are some stocks that probably do okay, but I think a lot of them are probably going to get hit on that dollar, right?
Yeah, big time. Dave White, Tom O'Brien, we want to hear from you folks. Our phone number is 877-927-6648. You stay right there. We'll come right back. Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? EverBank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. EverBank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. EverBank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dave White, Tom O'Brien. Appreciate you growling and prowling with us. And don't forget, folks, at TFNN, we broadcast live every trading day, 8 in the morning to 6 in the evening. We take that, replay it all night, so you can get us 24 hours a day. You can get all that programming right on your cell phone, TFNN.mobi. If you'd like to get Tiger TV, just go to TFNN.com. You see the TV on the top right-hand side. Hit that TV, you get the audio, you get the visual every trading day. 2 to 3 Eastern Standard Time. Dave White has an outstanding show. You can call in. You can talk to him. Also has a great newsletter, the Tech Insider. The way you get that, you go to TFNN, go to newsletters, go to investment newsletters. The Tech Insider is right there. You can test drive it 1 month absolutely free. So, earnings are coming up.
They certainly are. And I think it's going to be, if you've got a lot of exposure to the rest of the world, as most of these big multinationals do.
Right.
I think we're going to hear the guide down, the dollar's hurting us, or their earnings probably going to come close to being good, but it's going to be the guidance, isn't it? So we're probably going to see earnings were great, and then 5 minutes later we're going to see the stock shoot up too much, up $2 and then down $2, right?
Well, what you have, you know, folks, the aspect of currencies are crucial to understand. In trading and in general. And the multinationals have, well, the S&P 500 gets 50% of its earnings overseas. That says enough. That says it all. Really, do you know what I mean? That's 50%. And if they get any of that from Europe, they're toast.
And 30% of all S&P earnings are energy, which is in the toilet.
Wow.
So
that's cool to know. That's sick.
Yeah. So
that's sick.
You've got to look at two parts of the market. And, of course, next week we're going to have two big from the technology sector. Intel on Tuesday after the bell, and we've got Google after the bell on Thursday. But we also have some financials. And to this point, I didn't really look at the financials closely today.
They haven't cracked yet.
Yeah, and I think you're still looking at probably them being the last one, and that'll be the swan song, right?
Well, if you remember, folks, when the financials crack, it gets nasty. I mean, and when they crack, man, they really crack. You know, but most of the time, that's going to hold up to the end. That's going to be one of the last ones to crack, because Wall Street in general will try to hold up the financials because they also know that you crack that and see you later.
The other thing is we've been watching just a horrendous amount of CEOs resigning.
That's it. Well,
that is the weirdest thing I've seen in a long time.
I think it's smart, actually.
Yeah. Oh, I know why they're doing it.
Right. Because
ring that bell.
So picture something, folks. Okay, when you're in this market, and when you're in it forever, which there's plenty of us that are in it forever. What you know is that that the market is vicious, and there's wicked cycles. And so when you're at the top of a cycle, and are close to the top of a cycle, you want to get out, because then the froth is there. You'll get paid more. There's all those different parameters that go on. And I suspect that the last time that we were down, many people knew that, okay, I can tell you that even in my own context of thinking in the market, I'm saying to myself, oh, this is going to be interesting, man, because of the aspect of where we would be in 2008 and, 2000. And I says, okay, we're going to be a lot higher, because nothing goes down forever, nothing goes up forever. And the same with this. This is going to be vicious. This is going to be terrible, okay? And then guess what? And I'm not saying hang on either. I'm not saying buy and hold forever, because that's a bunch of BS, folks, okay? Because what you go through in your head and in your gut might kill you. So, but that being said, 2018, 2019, guess what? We're going to be higher. Yep. That's just how it goes. Dunkin' Brands, Travel Zoo, American Express, Las Vegas Sands. It's going to be interesting to see what happens to Las Vegas Sands, the gambling companies in general.
Well, they've almost pre-announced, haven't they, by saying how bad things are over
Macau.
Yeah.
Macau is getting hit.
So some of these may bounce just because they've already said that they're pretty horrible to begin with.
Yeah.
But I think that there's some out here that we have, like Google. Could you get a surprise out of them? I think you could. I think there are some other things coming out here. I mean, it didn't look good today, but nothing did, right?
Right.
But some of these others out here are probably going to be very interesting on what we see. But Netflix, we finally got Tesla to kind of back off today, and it was down fairly significantly. And I think a lot of people said it was the new car. But I have a feeling he was talking last night before the new car business, and he was really talking. Here's my thesis.
Okay.
That is that almost all of these alternative energy companies are working on a huge amount of government money and subsidies.
Yes.
Those are going away. There's no way they're going to get those through again, at least the House. So there's no way that those things are going to be back up. They're out in 2016, 2017 is the end of it, and they're already starting to tail off. So a lot of these companies are going to have to, like his other solar outfit, Solar City, those guys are going to have to make money very quickly and become profitable. And without government money, they'd all be shut down in about 3 months. They're not making any money without the government, without the green checks and the tax subsidies and all the other stuff. But when he said last night, before they even got into the car business, he was talking about he really knew how much the only reason his companies existed because of the tax money. I thought I heard that after the bell last night. I thought, oh my God, I'm too bad I'm not short right now, because I knew everybody else already knows the truth of that story.
But check this out. This is I love that you brought this up, because the reality, folks, and this is the hidden reality and the hypocrisy behind corporate America, and behind not only corporate America, behind conservative corporate America. And what it is this. The folks that are out there that are continually saying, subsidies, 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 right? I get more subsidies than anyone else.
Right.
United Technologies, Boeing, GE, okay? All the housing places, folks, okay? What you want to take apart is the aspect of what someone says and how much they're dipping into our pockets. It's crazy, man.
It is.
I mean, we know that it's blatant, well, no. What it is this. In the solar business and in the new energy business, right, because that's a green business, that what you have is that you have the Joe Kernans of the world always going, hey, this money. They won't touch Boeing. They won't touch United Technology. They won't touch
I don't mind them spending the money so much in alternative energy. I would have liked them to give it to DARPA or some other organization that would have made a technology that was instantly ready to go at a market value and could have continued to make money. The problem is this is betting on the come in that if we get them going enough, then maybe they'll be able to become self-sufficient one day.
No, my point is
I know
this.
yours is another point.
No. My point is this. I think you're right. I mean, I think we're wasting money.
Yeah.
Don't get me wrong here. I just want people to understand that, guess what? We're getting taken to a cleaners a lot.
Yeah, not just this.
No, dude, exactly.
But to me, not only could you do something, but you could have all of the industries that came out of the space race, right? All the things, computers, Intel,
sure.
all those other companies. If we could make a business that was financially sound to begin with, a technology that didn't have to be subsidized.
For all you young tigers and tigresses out there, this is what you want to do. The most amount of money made in the United States has to do with understanding the accounting and tax implications and where the green checks are. And it's not that hard, but pay attention to it, because that's the number. Dave White, Tom O'Brien, we're coming right back. It is?
Yeah.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
you take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dave White, Tom O'Brien. Appreciate you growling no problem with us. We had the Dow finished down 119, NASDAQ off 102, S&Ps are off 22. And when you take a look at GE, folks, you know, we were taking a look at that February 5th benchmark. Well, GE's there, folks. Not only there, it's there with volume. It's blowing it away. The February 5th benchmark on GE, well, actually, it says 24.22, and we hit 24.21. It's pretty wild, man. You know, the benchmark had 243 million shares, and we've done 181. You know, so it will need more volume. But bottom line, that's another benchmark that is down there in spades. Right now we have an out of time in the trade chart up, and that's of the small cap, the Russell 2000. And this is pretty cool. So what are we looking at?
I just wanted to show, especially if they've got your book.
Yes.
This is the time to go back and look and what you are going to find likely bounce points. But we've got a gap and we've got confluence that looks beautifully.
And it's long-term confluence.
Right. You don't want to use it short-term, and you want that range to be very narrow, so you know if you're right or wrong, not to be big and fat and wide.
Right.
And if you're watching on Tiger TV, there's a kind of a big fat one up here about 112. But that's not the one we're looking at. We're looking at one very thin, just a few cents either side of 104. Yep. And if we go back and look at the longer term on this, you're going to see that your focused numbers to put into this is November 16th, 2012. The next one comes up on June 24th of 2013. So these are some long ranges. And you're going to see that gap comes right in at about, what is that, 105?
104, 105, yeah.
Yeah, 104 and change and stuff.
And so the point which Dave and I are making, folks, and this is important to understand, when you have a longer-term chart like this and you're coming into confluence, confluence is a place where stocks like to bounce. They can slice right through them, but they like to bounce, particularly after you've gone down like this. So that's a price projection, how you can look at it, and then what you can do, which is pretty wild now, is that with that big, thick confluence on the way up, that bounce can get up to that level.
Right.
And that's going to be your B to C of an ABC structure on the way down. You know.
So that takes you up to maybe 110, 111, something like that. And then next time you come down, energy even gets bigger and you blow through the confluence levels.
Right.
But if you're trying to do a conservative trade out here, you'd probably say the IWM has been headed down for a long time.
It started.
It's probably going to be the first to bounce.
Exactly. It started. There's no doubt. It started on the way down, folks. So pretty wild. The whole thing's pretty wild. Okay.
Yeah. Okay. Let's get rid of his. Okay. The other thing I wanted to show was a trade that we completed in the Tech Insider today. Yes. And I had brought this up the day that we went short because I was in here.
I remember this. Right.
But I loved it. We probably shorted every one of the 3D stocks after they hit their highs in January. I put out a special report and said 3D stocks have all topped out. We hit 3D Systems, and we hit X1, we hit Voxel Jets. We took a lot of money out of those on the way back down. But one of the ones that had never broken was SSYS. It was the darling of the hedge funds.
Okay.
But what it did was come back up here to the 128.95 high, and 6.7 million shares spiked up there. Got back up here about 2 weeks ago.
2.2 million.
2.2 million. And, of course, the energy, if you look at my power law vector indicator number, the energy came out. But just at that highs, there was nothing. And that spike in the day, you could see them running. It was on an upgrade. And they couldn't get anything going. I pulled the trigger on it above 130. So my customers, subscribers were short at 130. Now, I said you could either short the equity.
Okay.
Or you could buy puts. And I was thinking it was going to take probably to December for it to come back down.
Okay.
So we bought the 115 puts at less than $5. I think he probably got them at 470.
Yes.
Something like that. And we were out, and they're trading the 12 to 13 buck range today. We covered that up. And the only reason I did that.
Sweet. So what happened, folks, because it went so quick, he got not only the premium because it's only October.
And the VIX went up, too.
And the VIX went up, and it crushed the price.
Right. So we got everything now. The only reason I took this is into a gap with a huge volume. We went ahead and took the cash today. Now, I took one other trade in my daily newsletter, but I still have a great deal of shorts on in the newsletter. But this is probably, when you're looking at price and volume, a great way to look at it. If we had lots of volume today, this is about halfway through, so the volume probably was more. But it's never going to go through that big volume day on the first day.
Right.
So I'm going to have an opportunity to probably take another swing at this, another bite at the apple here soon.
Oh, there's going to be plenty of time. There's no doubt. So next we're looking at Cowboom.
This is my website of the week.
Okay.
This is Best Buy. I don't know if you've gone into Best Buy, but they're taking trade-ins.
I like Best Buy.
Right, but they're taking trade-ins, your old tablets, that kind of stuff.
Okay.
Now, they've got their own website called Cowboom, where they're actually reselling this. And I bought a Kindle Fire HD last night for $50.
Sweet.
And now it's used. It was a trade-in.
Who cares,
but you spent about $120, $130 used if you got on Craigslist and drove all over town.
That's dynamite, man.
They now are in the used electronics business for a better thing. But if you look, this one was $99, but if you look around and search on the web, you'll find some of these sites with discount codes. That's how I got one for $50. And if you're the first rat to the cheese, each one is labeled with, whether it's got a scratch on it or a perfect and everything else.
Yeah.
But they set the prices, and they're all pretty much the same, but the conditions may not be. So if you're the first rat to the cheese, you can buy something. But
that's a great deal, man, because what you're going to have, I can think about in my house right now how many devices I have that I don't use. That are good devices, okay? And you know what? Someone else could use them. And what ends up happening is that a Best Buy, I trust to buy out there. That's what it comes down to, So connected to the Internet of Things.
Right. We've talked about the Chromecast. It was one of my top picks for last Christmas.
Right.
It has become the most connected device on the Internet.
Really?
Basically...
Remind me what it does again, though.
This is the device you can stream to. You plug it into your TV.
Yeah.
And through your wireless web, you can watch TV. This is how I watch Netflix.
Okay.
On my TVs in the house. But you can also, if you use Chrome browser, you can click a little button in the corner of the Chrome browser, and it will take whatever on your PC or your tablet and put it on the TV too. Now, they've got some interesting new technology that came out just this week that I turned on and saw last night, so I'm going to bring it up.
Okay.
But it is, you've got a bunch of different apps that work with this thing. It's $30, but Google did a pretty good thing. They are the most connected. I mean, the whole thing is the Internet of Things that everybody's talking about, right? Thermometers, temperature sensors,
right.
Letting your dog out remotely,
yes.
Webcams. Well, I think we've seen the first really big success of the Internet of Things with this kind of an autonomous device that does nothing unless you talk to it from another computer, right?
Okay.
So, pretty neat. But they added some things
and you just have it right in your pocket, so you can bring it anywhere.
You could, right? But mostly you're going to leave it at your TV at home.
Oh, you do?
Right?
I see. Yeah. Okay.
But that can it. Now they're adding some things. They always had kind of a little slideshow going on.
Yeah.
But they're adding local weather, and they're adding more apps to it too. So for $30, not a bad deal. And if you've got Netflix, an easy way to have it stream directly to the TV. Once you get it streaming, you can leave your computer and do something else with it. It takes over. So once you start the movie, you just back off, and that's it.
We had a question. Does it only work with Chrome? But you don't have Chrome on your TV, right?
Firefox or Chrome. This is when you want to use your browser.
Okay.
To take maybe something you've got on your computer and pop it up on your TV.
Okay.
Okay. But yes, you've got to use either the Chrome browser or there's an add-in for Firefox. It doesn't.
And that's on your computer before you put it in the TV.
Right.
Right. I got it. Okay.
There's just a little button in the corner. You click it, and everything that's on your screen goes to your TV.
I get it.
Okay.
I get it. Okay. Cool.
So pretty neat technology.
That's cool. Okay. Let's not put it off.
No. Let's put it off.
Oh, let's put it off.
Through all the yelling and screaming this week because of the market gyrations, a lot of people didn't pay attention, but the FCC has really put off their decision on the merger till next year, and it looks like it's even going to go into next summer for the Time Warner Comcast. They basically wrote a really nasty letter to them, which is uncommon with all the money they're throwing around Washington.
Sure.
But basically, they said, you didn't answer any of our questions.
I love it.
Come back to us when you can.
That's good.
So at least this Comcast Time Warner thing is off in the future. I think it's probably one of the worst ideas in the world.
I agree. No, I know.
You don't want all the power.
They'll take us to the cleanest, folks.
The Discovery TV people that do all the Discovery shows and History Channel, all that. The guy was scared to death to say anything on TV about them the other day.
Really?
They're a wonderful company. Oh, they're wonderful.
Wow.
But you imagine if you're somebody like Discovery, what happens if these guys walk away and take 80% of the business in the United States between the two of them?
Right.
You can't afford to put that much, and I don't want that much power in the hand of somebody.
Yeah.
A single decision maker, right?
Not even close. Dave White, Tom O'Brien, you stay right there, folks. We're coming right back. Dow Industrials out here, bottom line, they're all down. They're all red, folks. They broke trend lines, and we're going lower. You stay right there. We'll come right back.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Put it on this one if you want it to show.
Yes, sir.
Okay.
Welcome back, folks. And folks, as you come over to TFNN, if you happen to be in the CD market or you have cash that you are not going to be putting in the equity market for 4 years, check out under breaking news the Tiger Real Estate First Mortgage Program. The way that program works is that we're putting first mortgages on many properties that we have. We're paying 5% on an annual basis, paid monthly. As you check that out, I put a little YouTube video together. You can see exactly how this works. As you go over to the website, which is Tiger Real Estate Opportunity Fund, there's a banner on the right-hand side. You're going to be able to see part of the portfolio. There's much larger than what is on there right now. But what you'll also see is the closing documents. It says sample closing documents. Those are the actual closing documents. You'll see the mortgage promissory note, the loan policy for your title insurance, the HUD disclosure. It's all out there. You'd have a chance to be the bank. That's what's going on here is we're taking all the middle out. And this is what the Internet does, which is just amazing. So you're going from, you are the bank. That's what it comes down to. So it's 5% annual basis, 4 years, paid monthly. The loan value is 70% of the third-party appraisal, so you have another 30% in your pocket. And check it out on the front page of TFNN over the weekend. We're looking at Tesla right now.
Tesla came out with their new car last night, and you'd love it, Mr. Leadfoot.
Yeah.
It's got 600 horsepower.
That's amazing.
They've gone to dual engine. I thought they might, like the Fiskars.
Did you say dual engines?
Actually, I caught myself dual motors. It's electric.
Okay.
It doesn't turn chemical power into energy. It turns electrical power into energy.
Okay.
It has 2 motors.
Wow.
And both of them are on the back wheels.
Yeah.
There are other companies have tried electric cars by putting smaller electric motors in each wheel.
I see.
Now, if you want a sports car, that is technically called unsprung weight because you can't put an actual shock absorber and really spring it. So it makes the car not handle as good. So it's a little bit more weight back there. But I think most of the people that I saw driving it last night could care less. They wanted to stomp on the accelerator and watch the thing take off about as fast as a Ferrari. Now,
wow.
One of the differences, if you drive it like that, you're probably not going to get the 245-mile range they said, but probably 90 miles.
That's all right.
But if you drove a Ferrari like that, you'd still have a 16 or 12-gallon gas can. You might be able to get 210 instead of 260 out of a Ferrari. So if you're driving like an idiot or not on the track, it's going to be interesting, but certainly a lot of high power. And that's when I was talking earlier in the show that I thought that Tesla got hit not because of this car, but because I think they really he talked a little bit too much about being dependent on government subsidies for how much cash is rolling into the company.
Right. Wow.
But that was out last night. This one I really think is an interesting article.
Does that say O squared? What does that mean?
O2.
O2.
That's oxygen.
Yeah.
You got to have it. You got to breathe it.
Big time.
But everybody's seen everybody wheeling these little tanks of oxygen around, especially elderly folks.
Stop smoking, folks.
Yes, stop smoking. And one of the things that has been a problem is, in fact, they sell on TV now, is oxygen generators. So you can just sit next to it and leave it plugged in.
I see.
It'll constantly make a little bit of oxygen for you. But if you need to go a long distance, you're always changing these bottles out.
Yes.
Now, one of the other things, and the other reason I brought this up is being able to put more oxygen and hydrogen in a small space is a big deal if you want to use fuel cells for cars, which Toyota's coming out with next year, a fuel cell car. But what we did find in this is they've at least made oxygen work, and it is a chemical compound, but it's going to hold about 10 times the amount of oxygen that a bottle would for the same space. So we're probably going to see this in the next year or so, but it looks like they're going to be able to monetize this, turn it into a product, and people that do need to have oxygen all the time are going to be able to carry it. Now, my thought, more than anything else, is when you put oxygen and hydrogen back together in a fuel cell, this could really be one of the reasons I think that you're looking at Toyota putting out that fuel cell car.
Interesting.
Because if you really could get 800 miles on a single fill-up with a fuel cell car because of it, that would make a lot of difference. So when I saw this, my thought was, well, great for people that have to tow around oxygen. They shouldn't have smoked, just like you said.
So what is so you're going to have to wrap my head around a fuel cell now.
Okay, a fuel cell takes 2 different components, puts them together through a membrane.
And gives us power?
And gives you electricity that you can use to drive something like the Tesla.
Oh, cool, okay.
Now, of course, Tesla is building this $5 billion plant to build
for the batteries.
Right. Fuel cell technology is great, but normally the problem is the same problem with batteries is you just don't have enough range.
Yes.
Now, if you could take that and expand it 10 times, you'd have all the range you have, and at least they're doing that on the oxygen side. Now, hydrogen may be another story, but it would still drop your costs. And probably, even if you had to pay for separate oxygen and hydrogen, you're probably talking about the equivalent of about 50 cents a gallon.
No, that's good.
So it would be nice to get fuel cells.
Because once you tech guys get at least one thing going, then it's just a matter of time to get the rest of it going, right? Realistically.
It's a good idea. And, of course, the old joke has always been fuel cells are the technology of the future and always will be. Mostly because you needed so much space. You don't want to be driving a tanker down the street with all your oxygen and hydrogen behind you like a big semi rig, right?
I got it. Okay.
So you need something that fits in pretty much the scope of a standard car, and this gets at least 1/2 of it in the doorway. So that's kind of interesting. Wanted to talk about this because I think it is very important.
Nobel Prize for LEDs.
Right. In the 90s, early 90s, basically, the LED light bulbs that we see now everywhere are because they had red and green, but they couldn't figure out blue. And it took about another 20 years for them to figure out how to make a blue one. But he put red, green, and blue, and you get white light. So all the bulbs we have now, all the cost savings we're seeing in light-emitting light bulbs that are becoming popular are because of these three gentlemen. One guy was from Cree. The other two were, I think, worked for Panasonic. Okay. And they came up and they're sharing this. Now, that's interesting in one part, but the other part is that we're seeing so much things about Ebola and disinfecting and killing viruses. The next stop is, and probably the next Nobel Prize, is ultraviolet LEDs, because if they could make a lot of these ultraviolet LEDs work, they'd put it in all the air systems of hospitals, go into rooms, shoot it with enough
kills germs and viruses.
Yes.
That's huge,
and that if you go to a hospital already, they use huge amounts of power through the air conditioning system with ultraviolet bulbs already.
It's a beautiful thing. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like that. Nice big motion picture. Step into it. Take ownership of it and fly with it. Thanks for being here, folks. Have a great weekend. Safe weekend. Dave and I, TFNN, look forward to speaking here right here next week. Thanks, brother.
You bet.
Wow! Go get them, folks.